how are you guys doing today? You are here for the Black Wealth Experience podcast, and this is Brian Arnold, and I'm kind of your host. And we have what we've been trying to do is we're talking about the Black Wealth Housing Summit, and so that Black Wealth Housing Summit is going to be on Juneteenth, the actual day, June 19th. It's going to be from 4:30, or no, I'm sorry, 5:30 to 7:30. We're going to give you dinner, and it's going to be at Cross Purpose. And Cross Purpose, if you're from the Denver area, I'll put it, in the bottom with the actual address. Is on the corner of MLK Boulevard and Colorado Boulevard. So Colorado MLK, there is a church called Shorter AME that's on that corner, and it is right to the left-hand side, I guess, to the south side of that church. And so that's where we're going to be holding it. We need you to be there. We are going to put together an amazing night for you. So the goal is that we put a plan together for you. So the plan is going to be, we're going to make sure that you walk out of there with knowing a group of people or a team of people that are going to help you with home ownership. Because what we realize is the first step to generational wealth, the first step to your own personal wealth is through home ownership. You might not think it, you might think it's economic development, but here's what I'm here to assure you. The whole purpose of getting into the wealth world and into the generational wealth world and accessing a whole bunch of things that you've never accessed before is through home ownership. And so we want to make sure. So the theme here is, whose mortgage are you paying? Are you paying the apartment complexes or the landlord, person? Are you paying their mortgage? Let me give you an example. Let's say you're paying $2,000 a month, and that's not uncommon here in Denver. You're paying $2,000 a month for your rent. That's $24,000 a year. You times that by 12 months, right? So now you're at 200 or 300, $320,000 is what you've now paid in 10 years for that same use. So let's say 240,000. That's right. So if you do 24,000 a year for 10 years, then you're at $240,000 that you've now given that landlord, and that you've helped buy that. Probably if you were in an apartment complex, I can promise you've bought that unit that you lived in. That's what they may have cost to build at that point. And so we want to make sure that we have a financial planner, that we have an insurance person, that we have a lender, that we have a real estate agent, and we have a loan officer that are all part of your team. We're going to give you some software. We're going to give you an app for your phone that's going to kind of track your credit and make sure you're available. For some of you are ready right now. I keep running into people that have Mercedes and Land Rovers and all these beautiful cars that they're brushing snow off at the apartment complex, over $100,000 worth of cars, but don't own a home. And that is a depreciating asset. And so today we have a special guest, and our special guest is a banker. I've known Stephen for several years now. He is at a prominent bank here in Colorado, or in the Denver area, called Key Bank. He's right off of Colorado Boulevard. And he understands the banking world, the finance world, the world that you want to be a part of. Whether you interact him with a banker that's helping you with some financial needs, or they have some really good programs. Now, I'm a lender, and so I would love to have your business. I'm at City First, cityfirst.com, and you'll see my picture there for Denver branches. But that's not what this is about. This is our community. This is our community making sure that we get home ownership. The statistic that I heard today was 38% of, when we look at qualified folks of color that are in the African American community that have the ability to get a house, we're only at 38% in ownership. And we think of like a Hispanic community that's more closer to 45. The national average is 47. The communities of white folks that are there are open to 70%. We were at this statistic back in the 70s. We were at this statistic back in the 80s. We were at this statistic back in the 90s. And things have to change. And a lot of it's going to come from education. And that's what we're going to provide for you on June 19th, 5:30, 7:30, Cross Purpose. But Stephen, he's on here today. He's going to talk about some of the products or some of the programs that they have over at Key Bank in our community. And then, we'll go into a little bit of what it would be able to take to qualify it for. So, Stephen, thank you for being on today. I thoroughly am excited that you're here. I can't wait to hear what you have to say. You please tell people how to get a hold of you. Maybe do that first, and then kind of move into what is it that Key Bank offers in the community that will allow this statistic at 38% to get way higher than it is.
Yeah, no, no. Well, I first want to say thank you so much, Brian. It's an honor to be able to be on the podcast and be able to join the conversation with you all. I know at Key Bank, one of our big kind of focuses going into this year was really looking at how we are, kind of expanding our involvement in the community. We always are trying to be community based. We're always trying to, increase our presence, and then how we better represent the clients that we serve on a day to day basis. And a big part of that shift this year is really like going into the communities that we serve and creating programs, tools, resources, same as the Black Wealth program did, creating resources that can help our clients, especially in underserved communities. And so myself here, I've been with KeyBank for 6 years, a branch manager. I actually am transitioning from the Colorado Boulevard. I'm now at our Cherry Creek location.
All right.
So you can come see me at 3410 East First Avenue. Phone number, I'm going to share some screens and you'll see kind of my contact information, my email, how you can reach me now, as I kind of get into the different programs that we have. But definitely want to say thank you, and totally excited for the conversation that we'll be able to have today. I do want to apologize because my screen is a little bit black and I'm in my office right now. So the way the lighting hits our rooms it's always hard when I'm on video, but hopefully you can hear me. I'm going to share my screen. You won't have to see me as much, and then we'll be able to have a good, engaging conversation.
Oh, perfect. No problem. We're loving that you're here and that you're able to be involved. So however you look, that's how you look. But the information is what's important. So I love
it. Yeah. Totally. So what I'm going to do, I'm going to share my screen here.
Okay.
And then I'll walk through some of the programs that we have here at Key Bank that we believe are, beneficial to our clients, especially around affordable and government mortgage lending. And so definitely that's what we want to do. So here, and you can see that good there, Brian.
Yes, I can see it great. And then I think people will be able to expand it on their screens. If you do want a copy of this, we'll be able, go ahead and email us, look at the whatever in the chat below, and we'll make sure that you have a copy of these screens so that you can see it right up close. I got LASIK, so I'm doing okay now. If you would have asked me a year ago, can I see this? I would have see what? It just looks like something. But I went out and got to the LASIK doctor, and he took care of me, so I can see pretty well right now. So yeah, please,
nice.
We will get this to you.
Nice. Hey, kudos on the LASIK. My eyes are so bad. I just kind of stick with the glasses, what they call the Coke bottles.
There we go.
Contacts.
I hear you. I was getting there too.
Yeah. Yeah. But so on our screen right now, we have some of the programs that we have. And like I said, our focus was how can we, our biggest thing is as a relationship bank, we want to be able to serve our clients on whatever end of the spectrum they're on. And so a part of that is that we have, very high level, high value loans that we can work with clients on. And then we have our affordable government mortgage loans that we can help our clients on. A lot of it for us really starts with a conversation, right? It starts with a question, hey, are you renting? Or are you owning, right? The question we're asking that everyone is whose mortgage are you paying, right?
Yeah.
And for us, it's are you renting? Are you owning? And why not? Why not? And what is your long-term goals relative to renting and owning? And so based off of that question, then we can begin to navigate you down a path that makes sense for where you are now and how you can effectively and efficiently meet your goals. I'm going to talk about just a few products that we offer today, and a lot of them are centered around our affordable and government mortgage loans. Here on the list is just the ones that we have relative to our key community mortgage, which I'm going to talk more about, the Fannie Mae Home Ready Mortgage, the Federal Housing Administration mortgage, the Veterans Affairs mortgage, and then if you're in New York, the Sonny Mae mortgage. And so primarily when we're talking about, if you're renting or owning, you're trying to transition from renting to owning, then we're going to look at those first-time home buyer products, and that's where that FHA, the key community products come in to play. And so we offer those as well, as long as I'm pretty sure Brian offers that as well with City First and things like that. But the one I want to take a look at just to kind of dive into is our key community mortgage. This one here is a great product for us. It is one of those products, again, that allows us to really kind of take the tools and resources of Key Bank and provide a really good product for our clients, especially if you're looking at first-time home buying. The Key Community Mortgage is home ownership made easy. What we do is it is your affordable home financing option. Key Bank Mortgage can help make your dream of owning a home a reality. This program lets you take advantage of a low down payment option and making qualifying easier than you may think. So one of the key features of our Key Community product is that it's 100. You can get up to 100% loan to value on the purchase. So we can provide up to 100% financing with this product, as well as up to 90% loan to value on rate term refinances. It is conventional financing with no private mortgage insurance, which is another big one. You don't have to worry about PMI with this product as well.
So you're saying 100% of what you need to come in with. So it'd be maybe closing costs that you have to come up with, and it doesn't have mortgage insurance.
Doesn't have mortgage insurance.
Oh my gosh, yeah. That's an amazing product. I mean, we'll talk about what mortgage insurance is. Well, I guess I'll do it right now. So mortgage insurance, for those, usually what happens is if they look at a loan to value. So if your home was 100,000 and you had a 90% loan, that would be 90% loan to value. Or if you had, I'm saying 100,000, you had a $90,000 loan, that would be considered 90% loan to value. And most banks or most programs like you to be under 80%. So on a $100,000 loan, you could have an $80,000 loan and then not have to pay mortgage insurance. But anything above, so if you put 5% down, for instance, so you'd be at 95% loan to value, you would have to pay down another 15% not to pay mortgage insurance. And what mortgage insurance is doesn't help you. It's not like insurance on your house if it burns down or anything. What mortgage insurance is for the person who's lending you the money in case you default or you stop paying or you end up getting foreclosed. They make sure that they get their money for their loan. It does nothing for you as a consumer. It does nothing for you as a client. All it does is ensure that the bank gets their money if you don't pay your mortgage. And so it's one of those things that you hate to pay because you're going, I'm just throwing money away. I think, the last house that I bought, I was paying mortgage insurance for the first few years, and it was almost like $300 a month is what I was paying. And it was just giving to the bank to insure for the bank. I couldn't wait to pay down to that 80% so I wouldn't have to pay that $300 a month anymore. And as soon as I got it appraised for that, where I could have that 80%, I was on it. I was like, get over my house so I can stop paying that 300. And so what Steven's saying right now is they have a program where you don't have to worry about that at all. On most FHA products, you're going to pay some mortgage insurance. But on this product, the Key Community Mortgage, you're going to be able to afford the house maybe even more because you're not paying that extra mortgage insurance. So that's huge. I'm sorry I interrupted you.
Yeah.
But I just wanted to explain what that really was.
Right. No, and thank you for that because, people don't understand how much that the PMI piece is a big part of the affordability piece too. Is because when you're looking at what your monthly payment is going to be, a lot of times you don't come around that PMI until you get into the process. And so we're thinking, how much can I afford? And if you're not doing a 20% down payment, it's possible you're going to have some PMI. So you have to factor that PMI into your monthly payment, which is again becomes factored into your affordability, right? And so the two biggest advantages is like the no minimum. There's also no minimum loan amount, so we're not. It doesn't have to be a certain amount for you to qualify for it. And the big one is that PMI. That's huge for us. Along with that, we can do up to 100% loan to value. So you have 100% financing possibility with this loan. It's a fixed interest rate, as well as it works for 1 to 2 unit properties. Right, including single family homes, condos, or planned unit developments. And then additional funds required to close maybe a grant, a gift from a family member, or provided through a down payment assistance program. So if there are other costs like closing costs that you may have to come up with outside of the down payment, then you can actually utilize grants without you having to do so much moving and shaking to really identify or qualify where those extra funds are coming from. And then again, maximum 4% seller contribution allowed, and can be used toward closing costs and prepaid items. So from a first time home buyer's standpoint, if you qualify for this loan, this is a really good way to start. Get yourself kind of going into the home buying, home ownership space, especially again when you look at how much it can help you out with. Now there are some other things as well around it. So one of the things is that you will get the expert guidance from a trusted advisor. There is that we do have the flexible down payment options. It is really ideal for low to moderate income home buyers, which is another big feature of it, is that the way you qualify for this loan is you have to be either in a low to moderate income area or you have to have a low to moderate income period. And so we look at those two. Brian, I can get you the exact numbers on what the low to moderate income amount is. I'll make sure I get that for you, because I know when we initially brought this out, it was at a certain amount, but it has since changed. It's gone up just a little bit, and but that's just due to the economy and things like that. But I can definitely make sure I get that for you. But it is one of those key features. Another part about it is that you also will have to go through kind of like a HUD approved financial home readiness program class that you would have to do.
Okay, class. Okay.
Yeah, and just to say, hey, we want to make sure that you've covered all your bases relative to being ready, to own a home, and you're not going to get into any financial trouble. It's one thing to purchase a home; it's another thing to have a home and be home poor, right?
Exactly.
We don't want you in that situation. But that's why, like this program, what we're talking about, we're going to be doing with the Black Wealth Summit, like. Having this education information is critical. So that's our key community mortgage product.
Okay.
The other thing that I want to share is that we do have now, and this page right here is coming right from our website. So I wanted to share it because you can go right to key.com and kind of find out more about this. But this is our Key Bank Home Buyer Credit that we have, and it's a $5,000 community-based credit that we are giving to our clients. And the one thing about this is that it can help you, but when it comes to make home buying more affordable when you're in a qualified space. So I want to scroll down here a little bit because just to show you that here in Colorado, this is critical for specific areas. Again, the goal for KeyBank is to be able to make sure that we are helping our clients within our communities to make home buying more affordable and more reachable. And so that being said, in Colorado, I wanted to show you like the eligible communities that can get the 5,000. So Aurora, Denver, and Lakewood. And that alone is a huge population for our community. And what we're talking about, that you're looking at getting a home, purchasing a home, we're going to give you $5,000 they can use for closing costs, prepayment costs that may come for the new home, including mortgage, flood, hazard insurance, escrow deposit, real estate taxes, and per diem interest. So we're going to give you $5,000 towards those costs that again makes home ownership more reachable. Okay. And so the big part about it is, you must be located in that eligible census tract. And being from Denver, living here in Colorado, we know how huge that is for the communities of Aurora, Denver, and Lakewood.
Well, you think about the Aurora is the third largest city in the state. Denver is the largest city in the state. Colorado Springs in the second. I don't know if they're in this bucket, but that takes up a huge amount of space that gives the opportunity. Now, when you say $5,000 credit, that doesn't mean you're having to pay it back, right? You're not, or are you having to pay it back?
You're not.
No, so that's $5,000 they're giving you. So what I'm thinking is, when they come to you, they have to have a little bit of money, right? In case they go into contract for like the earnest money. So let's say there's, you have to have, I think our realtor, Eve told us a couple of days ago that we need, somewhere between maybe $2,500 to up to maybe $6,000 or $7,000 for that earnest money. The appraisal, that would be something else. Or is that something that they could use this money for? Or is that something they need ahead of time? Is that something they need like $500 or $600 for an appraisal? Another couple of $1,000s for inspection. But when we look at if they're doing 100% and then you need closing costs and there's $5,000 in the closing costs, what I'm telling you, my friend, is most likely if we can find the right realtor for you and it's in the right plan, you can have a home. This is what KeyBank is telling you right now is you can have a home. I know your relative said you have to have 20% down. That is not correct. You do not have to have 20% down.
Yeah,
I know your relative says you're better off just renting because you probably can't afford the house, or you got to, if the water heater breaks, you got to fix it. Let us help you with the planning of that. That's what kind of their class is showing you. This is how you own a house. But what I'm saying is, literally in the Denver area, which is a safe space, that you could get a house today, and most likely, I can't guarantee, I don't have a crystal ball, but in the next 5 to 10 years, you will have equity in that house.
yeah,
And I'm not telling you need to go buy $1 million house. He's saying, for a moderate house, for a moderate income, but this program is available to get you started. So if you have to start in a townhome, or you have to start in, a smaller home in one of these areas, get started is the
yeah,
key. Begin your process of ownership. So I'm sorry I interrupt you on
yeah,
that, but it was just so important to
yeah,
kind of talk about. $5,000 is huge.
yeah.
And the area that you have to pick from is even bigger.
Yeah, yeah,
Yeah.
yeah. No, I'll tell you, it is such a great program, and that's why, like, if you want, we can, like I said, we can get this flyer out to
Mhm.
anyone that may want it. It's going to have some of the nuts and bolts of the product, but the biggest thing is, yeah, is looking at, you're going to buy an owner occupied home with the residential mortgage through KeyBank, and then it must be located in an eligible census tract within eligible community, and that again, if for Colorado, Denver, Aurora, Lakewood. And so, yeah, like, we say information is key. No pun intended. I work for key. Information is key. And what I do appreciate about the role is that why I always say it all starts with the conversation. But then, I also have people who say closed mouths don't get fed.
Here we
So,
go.
if we're not asking questions, if we're not, taking deeper dives, if we're not looking for it, wisdom is in the multitude of counsel. If we're not doing that, then we are cheating ourselves. There's opportunity, there's resources out there, several programs. And this is one of the things I really, really appreciate about KeyBank, and being able to just be a part of the conversation and go from conversation to actual product, right? We can go from conversation to program and say, based off what we talked about, these are the programs and products I would definitely want to connect you with. So yeah, that's our home buyer credit program, and one that I'm really excited about. And then the last one, is the other one is that we have a key opportunities home equity loan. I started here down. We were talking about checklists earlier,
Mhm.
but I have here this one here is for clients who already
Okay.
own their home. But
Okay.
here's the key to that. Again, the one thing is that it's a special interest. You get a special interest rate, and is particularly for clients who again are in a particular census tract. So again, it's going to be low to moderate income, but it's also going to be demographic as well. So it's low to moderate income, and then majority minority as well.
Okay.
So
Okay.
this is an opportunity to get a home equity loan, with a very significantly decreased rate if they qualify, if they're in that right census tract, then with the decreased rate. And you'll see here, I believe that rate can go up to 3% off of whatever the quoted rates are, so that you can go from like being at 8% these days to maybe being 5% for a home equity loan, depending on where your credit lands. So this here is for our again, low to moderate income, majority minority communities. And this gives us an opportunity to get you a home equity loan, up to $100,000, right?
Okay.
So again, here are the advantages. For clients in qualifying communities, KeyBank offers outstanding special interest rates. First and second lien financing, interest paid may be deductible, and then you can manage your loan through online banking. Okay, so again, it's ideal for homeowners with available equity, and they have like certain personal borrowing needs. You want to renovate your home, you want to consolidate some debt. Right, you want to do that, and you can get this. I believe these go up to 30 years, as
Okay.
well. And so this is a great product. Again, just one of those things that we're offering, for those in our underserved communities, and just making home ownership. And then so what I like about home equity loans, is that I have the home, I own the home, But now, how can I benefit from that, right?
Mhm.
You get to benefit from the equity that you have in your home. There's so much that you can do from that, as far as like investment opportunity, debt consolidation, home renovation, right, which can increase the value of your property. There's just so many different things, but this is kind of shows one of those ways that once I get my home, here's a way that I can benefit from my home and just the equity that I've incurred or built in the home since I've owned it. And again, this is a conversation I like to have, because when a person gets in a financial tight, if you own a home, one of the first questions I'm asking you is, well, how much equity do you own in your home? I'm going to ask that, because the rates are many times going to be better than a personal loan, personal debt consolidation loan, and the terms are going to be better because you can go up to 30 years with these. And so it just gives you a little bit more maneuverability once we have that deep dive conversation and can drill down into your options. And I've had many conversations with clients who are looking for debt consolidation. I'm going to ask, do you own your home? How much equity do you have? Have you considered a home equity line, home equity loan? Because these are products that can help you, again, and gives you just a lot more flexibility when it comes to meeting your personal, especially even sometimes immediate needs and goals.
Oh, absolutely. And when you really start talking about equity, now, and we're going to do a seminar the week after, so it'll be the 26th of June, on just generational wealth. And when I think about utilizing your equity, I'm a reverse mortgage specialist, and, with seniors, I help them take out some equity so maybe they can help with the down payment assistance or help with being able. But what an opportunity to maybe even invest in another property or make investments in a business or things that you've been wanting to do that can create more wealth for your family, but utilizing this thing called a home to do it. What I don't want you to do is take a home equity loan out and go buy a car with it, because you could probably get a car at the same percentage, right? Please don't do that. So that's why your team is going to have like a financial advisor portion of it, or a banker that's going to help you make those decisions, because they are big decisions. Am I saying renovate your house? Well, it depends. If you're going to renovate it so it increases in equity, then that's a great thing. If you're just trying to make a game room, out of it so you can enjoy it, there's nothing wrong with that either. But I'm saying maybe we don't want to borrow money for that. Maybe we want to save money and do the game room. So we'll look at those different aspects. Stephen, one of the things I would love for you, because we're going to do this housing summit. It's going to be on June 19th. It's 5:30 to 7:30 at Cross Purpose. And I want you to bring your flyers here, and so you'll be able to talk. Hopefully, you'll be able to come, or somebody from your bank will be able to come. So KeyBank will be there for you to talk to about this specific loan. But I want you to kind of talk about maybe a little bit of just what does somebody need to do, prepare for before they come see you. It's great to look at it on paper and we get all this information, but we're about action. And so, we can talk about this for 3 years and you still don't make a move. No, when you leave us at the housing summit, you're going to have a plan, and you're going to have an action plan. We want you to actually take action, not just come together some information. So if you come to the housing summit just so you can get some more information, you already have the information. You're coming to the housing summit, so you're going to get a plan. I also want to almost want to call it a workshop, because we're going to be asking you, some not detailed questions about you, but we're going to ask you the aha questions, like how long have you been living in your apartment in your mind? I'm not going to tell you to say that for the whole thing. How much money have you actually paid the apartment complex over your life? How much, in many cases, most of us, if we're in our 30s or 40s, have paid enough to actually pay for a property, that actually done. So what are some of the things that they need to come ready for, thinking about, knowing what they need to have?
Yeah. So I'll scroll down here, and this will let me get into a bit of a checklist. And we have other checklists that you can go through depending on the product that you're looking for. All right. So some of the things that we're going to look at for each applicant, we will need personal data, right? Basic stuff, any account, name, date of birth, social, current address, right? Income. One of the big pieces of it, right? You have to do income verification. So if you are a salaried employee, which means you get a W-2 at the end of the year, look at your last 2 pay stubs, previous 2 years completed signed individual tax returns. Okay, personal financial statements may be requested, and we have documents a form that can actually walk you through filling out a personal financial statement. We can get you those. If you are self-employed, though, your previous 2 years completed and signed signed individual tax returns and previous 2 years complete and signed business tax returns. And one of the things about it for self-employed individuals is if you are self-employed and that is your primary source of income, you do have to show 2 years worth. And I have seen a number of business owners who, it's only been a year and a half, and then that totally cuts it off because, we're definitely looking at cash flow, and the way we determine where your income really is by scrubbing those taxes. And so having 2 years of completed tax returns on the business and in the personal is critical for self-employed individuals. Okay, if you have public assistance income, we just want to make sure that we have the letters that exhibits from the paying agency and that state the amount. So we typically are getting like the annual statements if you're getting like public assistance, Social Security, things like that. And then other income types, if you're getting alimony, child support, you want to make sure you have the right documentation to show that court orders, monthly statements, or showing that those amounts are going into your checking account. So we sometimes will need bank statements, savings, checking account certificates of deposit and investments. We like to look at your assets. So if you have any assets, liquid assets that can be included into looking at not just your income, but what you have available from a financial standpoint, then we would have that. And then debts, complete list of outstanding debts, including credit cards, loans, and lines of credit. And one of the reasons why is because what we do look at is a thing called debt to income, right? And so relative to the affordability, we're going to look at your income, and then we're going to look at the debts that you have right now. And typically with KeyBank, you want to land in about a 45% debt to income range. Okay. And so that's one of the things that we'll look at. Some of that debt to income shifts depending on where your credit stands as well. But for what we're looking at, typically credit needs to be about around 660, and that's usually across the board with KeyBank. And then ownership, property value, and existing mortgages. So if you have other mortgages, we want to make sure we get a good understanding of where those stand as well. And so that's kind of like a breakdown of where you want to be for like the key community. Again, 660 relative to credit score is where we like for you to land, and then 45% debt to income is where we like for you to land. And that's typically across the board a lot of times for KeyBank with a lot of our products. When you get into like our other mortgage products, say like Fannie Mae, FHA, those are lower. Maybe you can go as low as 620 on the credit score, but it just all depends on the product.
Gotcha. Well, thank you. I mean, and so far, I get the question all the time. Well, what do they need that for? What did I told them I have a job. Okay, they're getting ready to give you hundreds of thousands of dollars, to loan it to you so that you can have this house and live in it. They want to know your situation. And the more information that you can give them, the more that we can do with it. So it's not saying, for some folks, they're ready to go right now. For some of you, we might have to do some things to shift things around to help you. I think I was talking about it yesterday. There might be some ways that we look at how many times are you going out to eat, and so we realize, oh man, you're going out to eat 5 days a week at, $30 a pop. So, that's 100, 5 times 30 is 160, right? And so you look at that, you go, okay, so that times for a month, that's over $500 a month that can come out of your budget, where you might have to, eat, some top ramen. I'm not gonna say top ramen. I'm just saying you have to eat at home, or you go out one day a week and we take some of that money out and you do some cooking. But it allows you to be able to qualify for an asset that's going to appreciate. The food's going to go into your body. It's going to go down your stomach, and eventually you're going to poop it or pee it out pretty quickly. And it doesn't last. But we're looking at a lasting investment in finding money. And so when we go through this checklist, don't be scared of the checklist. That's the time to go through the checklist and say, I have this, or I don't have this. I need this. I don't need this. Okay, I'm self-employed, and like you said, okay, maybe it's been a year and a half. Okay, so the plan is we got to wait 6 months, and then we got to have somebody file taxes. I'm going to have a tax person on in next week that's going to talk about, okay, how do we make sure we do your taxes right? How do we make sure that if you're self-employed, that that it shows the income that you need to be able to purchase? Because just because you're self-employed doesn't mean you shouldn't have a house. And you don't have to be self-employed and make $1 million to have a house either. You can be self-employed and make an income like other folks that have a salary job and still have a house. It's just the way that it gets documented. And it's so important that you're not, I don't want you to look at this checklist and go, well, I don't have that. I don't have that. And then you're making the decisions for the bank instead of the bank making the decisions. because you haven't been through the process before, and you had some relative again that went and told you you can't do it, you shouldn't do it, it's not going to be worth it, while they're still in that same situation. Like, when's the last, that relative who's usually saying it is a relative that doesn't have a house either, and will
Mhm.
probably be jealous if you figure out how to get a house that they don't.
Yeah.
Right. And
Yeah.
so and then bring them to the seminar too, so you can both learn together what it takes. And so
Yeah.
thank you for putting that together and putting this piece together. What else would you want to say before somebody comes into you to start thinking about, could they do this or not?
Yeah. Well, see, I think you really hit the nail on the head with this, and just kind of going through the checklist, because it can feel daunting. It can feel daunting, but it doesn't mean that it's not possible. And so once you have this information and you can start putting it together, it is a long investment. It is a long-term 30-year investment at the most, right? That you're going to make in a property. And it could be your first property, second, third property, like it. So understanding the process and what it takes, I would just encourage people, don't be discouraged by that. I'll give you a quick scenario. I remember in 2020 going through the PPP process and helping a number of businesses through the PPP process. And it was funny how much information, or the lack thereof, made the difference as far as who went for the PPP. Because there was a lot of people who didn't understand that they even qualified, especially when it came to my business clients who were sole proprietors. But what I did notice is that the companies who looked at the checklist like this and were actively making sure that they have documentation in place, they were the first ones who were able to access that free money. And it was free money that it was going to be forgiven. Some of the easiest loans I'd ever given in my life, and it was like, but they were the ones who were getting it. And then I remember people were a little frustrated because, like, well, this company's getting, do they really need it? But the pandemic hit everybody. Whether you're big or not. But what happened was, the bigger companies, because they were already in this normal motion of tracking taxes, tracking expenses, tracking payroll, they were able to provide the information up front and then get paid faster. And so my thing is, if we're having the conversation now, and you start putting these pieces together now, then really, when it's time for you to do your second loan, when it's time for you to do another product, you already now are aware of what it takes to win when it comes to home ownership. And it'll be like, you'll come in the next time with me and you're like, oh, I did this before. We're fine. We got it. Because you realize, going through the process, as daunting as it feels, it's not impossible. And once you've gone through this, I promise you, you won't slack when it's time to go through it again. But I think everybody needs to train themselves to go through this process, because it's the people who are winning. They're the ones who are doing this. They're the ones who are getting the documentation together. And we know that the faster we have this, if I have this, like, I'm trying to have this before I even submit an application, right? Like, because we know, if we as much documentation as we have up front, that's going to help the underwriting process. So I'm always thinking about that. It's like, don't be discouraged. It may seem daunting, but it's not impossible. This is what you have to do to get yourself. And I have 6 points that I'm always thinking about as a financial professional. But one of those points is credit worthiness. And this is what you have to do to become credit worthy. And I feel like, for me, relative to the people in my community, I love having conversations with people about how to become credit worthy. There are always things that we can talk about as far as like the fairness of credit and different things like that. But at least you need to understand the system. You got to understand how it works. And a lot of times what we're doing, we're looking at becoming credit worthy only at the time that we're trying to purchase something.
Gotcha.
But I feel like the time you need to be getting credit worthy is when you're not looking at purchasing anything. You need to do it beforehand, and you need to just have it as a part of your process. Credit is a part of our financial system. Start the steps now. All of this documentation is similar. There's overlapping things. There's some things that are unique, but for the most part, it's similar across the board of documentation that you're going to need. And so if you're thinking now, how do I get myself credit worthy? If you're young or older, have that conversation, because I feel like credit worthiness is important. Being financially sound is another one. For me, being investment savvy is my third one. Number 4 is identity protected, understanding how to protect yourself in this environment, and then being opportunity aware, which is where things like the Black Wealth Summit comes in hand, and then being change willing.
Gotcha.
And so for me, these are the 6 things when I think about financial wellness as a financial wellness professional at KeyBank, that change willing is the most important part. Because if you're talking about purchasing a home, being a homeowner, if you're talking about advancing yourself, getting to that next level of generational wealth, you're probably going to have to change some things. And it's your willingness to change that'll make the difference down the line as far as how you make adjustments, as far as how you kept mentioning, Brian, who you talk to. You got to make sure you talk to the right people. You got to make sure you're dealing with the right persons. You got to make sure the people dealing with people who are going to get you to the next level. So my thing is just encouraging us to change, encouraging us to be opportunity aware by really being in spaces where we can absorb information. Right? The Black Wealth Summit is going to help us absorb information, put us in a position that we need to be so we can get to the next level of generational wealth that we all desire to be in and we should be in. So that's
I love it. I love it. And I love the one where you opportunity, awareness and knowing that when an opportunity comes up. And so one of the things that going through this process does is it creates some habits. And it takes some time to create some habits. But if we get in the habit of having this information ready, we know these are the key things that we need. We know we've gone through this process before. When an investment opportunity comes up, or that once in a lifetime thing that tends to happen about 5 or 6 times in a life, we are ready and able to take advantage of it instead of watching somebody else and living life through somebody else's lens because we didn't even know what we were supposed to do. And that's why I'm saying, this home ownership, thing is your first stepping stone to generational wealth, to your own personal wealth, because it just puts you in a place where now you have the opportunities to do so much more. And it's hard to explain to somebody what opportunities are available once you have a home. But 2 people walking into your bank, one has a home, one doesn't. They have different opportunities. I promise you. As much as you want to say that first time has never bought a home before, we treat everybody the same. It can't be that way because the person that you walked in with probably already has some equity in their house. Already has some, credit worthiness that you just talked about. That because they have a track record of making these payments on a house where this person over here doesn't. And so they are not the same as far as financially, their abilities financially to do something. And so again, the Black Wealth Summit is on June 19th. It's from 5:30 to 7:30. We're going to give you dinner. We're going to make sure that you have it. Stephen, I appreciate you being on, and we're out of time today. I'm going to have you come back because after the summit, we're going to really be talking about, okay, what do you do now? And this isn't something where we just want to get you into a house and then we leave you alone. This is something that we want to put some plans together. And that's why a financial planner wants to be part of this team, because we want you to look at wealth for the rest of your life. And what is the next step? So the first step is getting in a home. And that's all I want to concentrate until we get every single one of you who watches this, every single one of you in our community into a home. Once we get you into a home, now we want to make sure you keep your home and that you're making really good financial decisions. So, Stephen, can you tell them one more time how to get a hold of you?
Yes.
In case they don't make it to the summit, how can they walk into your bank or just call you? What is it they need to do to get a hold of you?
Yeah. So just a little information on my name. Again, Stephen Cartwright. I'm at the Cherry Creek location, 3410 East First Avenue in Cherry Creek area, right close to the Cherry Creek Mall. Phone number 303-321-1234. It'll get you right to my branch. Ask for Stephen Cartwright, and we can get you connected from there. My email, Stephen, and that's Stephen with the V, Stephen_Cartwright at keybank.com. And those are all the several ways that you can get in touch with me.
All right. Well, thank you again. Another episode of the Black Wealth Experience. We can't wait to talk to you again. Please listen to these. Get to the summit if you can. If you don't make the summit, you're out of town, you're vacationing. These podcasts are great. Still going to RSVP. There's a thing there. We can get your information. I'll change the button after the summit to just give us your information so that we can start working with you. So thanks for being part of the podcast today. Again, Stephen, thank you for being here. And we will look forward to talking to you guys soon on the wealth side for sure.